market. We got a kind of take us through some current events and maybe even look at some live trading. So, Boris, good morning. How are you, sir?
Good morning. Good morning. Good morning. Doing very well. I mean, obviously, U.S. markets today are closed for federal holidays, so not much, action. But we do kick off a lot of interesting event risk as the week goes by. Most importantly, we're going to have the what's called Hopkins testimony, which is like really this tells me how old I am. It's just basically the Fed chair is going to be testifying in front of Congress. I think Tuesday, Wednesday. So that should be interesting because usually sometimes somebody always gets them to trip up on commentary, and really the big
questions, right?
Right, on the questions, and really the big commentary would be, and I think this is what surprised me about the FOMC meeting, that the market interpreted the FOMC meeting as being hawkish, meaning that this was a pause, not a stop, right? And I thought he was much less bloodthirsty for interest rate hikes than in the prior conferences. Like in the prior, in prior press conferences, he would just go, we know it's hard, we know it could cause a recession, but inflation is much more important. It's important for us to kill inflation. And this time he was like, we'll be data dependent, we'll see, and the point is that inflation is actually coming down on every level that you can look at. I know people don't think so, and people have a huge my crew went over there. People don't think so, and people have a huge amount of, kind of recency bias on inflationary pressures. But if you look at across all the data sets, it really is coming down pretty significantly. As I said, the other part is that wages are really not. You can't have inflation unless wages go up, and right. wage growth is sort of tempered as well. So it's hard to imagine that the Fed is going to get super aggressive. Although some of the Fed the vice chairs and some of the other Fed governors have been saying that they're perfectly comfortable, going more if they need be. But again, the question is if need be. So my point is, I don't think that he's going to be nearly as hawkish as everybody thinks. That's why the market has been, really rallying hugely. And at this point, there are a lot of people on Twitter who I follow who are clearly getting, I think, very, very nervous about the overbought conditions in the market. I don't think, and nobody is really, I think, arguing that this is peak top, but we certainly are due for a little bit of a.
Well, I heard Shapiro. I think it was yesterday, a couple of days ago, and I know we've talked about him before. And he's changed his tune a lot too. He's saying This is if they want it, I'll give it to him. He's not he's no longer a bull. He's not short either. I guess he's going to be data dependent, but he's kind of changed with the waves.
Well, I think one of the, and I was just thinking about this. This is I think if you're a trader, what you want to do is you want to create an all-star team of analysts that you want to follow, right? Like it's sort of like if you're recruiting for your baseball team or your basketball team, you want to have like the best person in each position. And the reason why I like Jason Shapiro so much is because he's probably the best reader of market sentiment, because he's got done all these algos. He does all the dirty work for you. Like, this is the other thing I realized. Why would you want to do something from scratch? Yourself, when there are professionals who are doing this stuff much better with much better tools and much better analytics than you ever could, because that's all they do. And to me, that if you want to understand market sentiment, you kind of go to crowded market. You go to Jason, and you can see he was super bullish just a month and a half ago.
Right.
He really, really shifted. As a matter of fact, one of the interesting trades he suggested, he says it hasn't quite turned yet, but if you're gonna take a trade, he says a long yen, which is short dollar yen, which nobody wants to do that. We're like, what do we hit? 142 today before that? Like, nobody's even, like, everybody's just long. Yeah, because the BOJ is in yield control mode. They're basically continuous easing mode. We're hiking. Everybody thinks that there's no possibility that yen could rise, but any kind of a risk aversion move could really unwind that trade very, very fast.
Right.
So I thought that was interesting. I mean, if you're a contrarian trader, this is you should be looking. And so what I was going to say is, so you have a guy like that for market sentiment, right? And then you employ whatever strategy that you think is best, or whoever guy who has got the best strategy that you want to follow for timing. For so let's say Jason is bullish yen, but you don't just go short yen. You wait for whatever indicator you have that's telling you, oh, it's breaking, it's breaking down, it's whatever it's losing, losing Bollinger Bands, it's losing RSI, whatever indicator you have. Once you have that signal, then you have a lot of confidence because you already have sentiment on your side, you have the signal on your side, the trade becomes.
Talk about like a super confluence. So we're using the know-how of an expert along with our strategy to figure
or
timing.
the strategy of somebody, like, in other words, somebody may have a really great tops and bottom strategy, right? But remember, tops and bottom strategy are useless unless they are applied against market sentiment, unless they confluence with market sentiment, right? I mean, all strategies fail. That's my whole point is there is no strategy that you have that could not destroy in 5 minutes flat. I will create a market regime that will destroy any strategy you have. I don't care how well backtested it is. I don't care how much data points you have. I will destroy it because that's the whole point. That's, I am the market.
That's what the market does.
That's what the market does. I'm the market. I can create a regime that will be just so bad that it will stop you out before it TPs you. And no matter how many times you adjust the TP and the stop, it will just make it worse. I can create that strategy for you, no problem. I'm very good at destructive strategy. So the point is, what you want is you want a guy whose strategy you like, who's relatively robust strategy, combine it with a guy who's got great market sentiment. Then you have like an all-star trade. You have like a great trade.
So let me ask you this, because you've been bullish for a while now, and we all have, because we're following price action. But with Jason's recent revelations, are you turning with the tides a little bit?
I am. I think we are due for a correction. I don't know when, and I'm not jumping on the bandwagon just yet. But I think we are due for a corrective move. And so like the point is, if you're getting long signals, you may want to do half Cs, half sizes. If you're starting to get short signals on whatever you're doing, you can have a lot more confidence that maybe some of those short signals are going to break, to the downside.
What if you were long? What if you were what if you've been long for a while? Is it time to take some profits, or are you comfortable leaving these on until you?
I mean, we're trading, so I'm assuming you're always taking profits. So we're not investing. If you're investing, it's a completely different story. Your time frame is decades. But if you're trading, I think you got to be, I mean, another guy that I follow is Andy Costain, who's Damp Spring. He and I are both so old. He was, I think he was a Drexel with me, like when I first started out. But anyways, he was a Solly. So he has like this risk parity model where it's, basically he weighs bond yields against stock yields and all this stuff, and then when those things get out of whack, he's like, it's just risk off. When those things get out of whack the other way, it's risk on. And he's just said he just went short on Thursday on his whole basket. He went short.
Is he usually early?
He's usually early. Yeah.
That's two pretty big names then.
Yeah, two big names. So I think it's reasonable to expect some sort of a corrective move. Mm-hmm. As I said, may not be this week, may not be next week, or it may very well be this week. And if you're trading FX, then that move is really the long yen move. Which is as I said, nobody's thinking of the long yen as a trade, but that could be an interesting trade.
Interesting.
Yeah.
So what have you traded? What are you looking at? I know we had a busy week last week with data. What do we have? Can you give us a quick summary?
Sure. Let's do a little screen share. Where are we at? 30. I think I'm gonna have to, bow to my vanity and put on my glasses.
Certainly.
Okay. And let's go. We're gonna go like the hourly charts. And actually, let's take a look at a couple of my other indicators. Hang on, No, I don't want to delete this. No. What is this? Hold on a second. I want to add this. Okay, here we go. I actually coded this indicator over the weekend.
Every week you bring us new indicators. It's awesome.
I know this is really cool. This is a scalping indicator, but I'm actually using it on a longer term chart just to kind of get a vibe of where we stand. This is dollar yen. I just put this on this is a 15-minute chart. This is a 15-minute chart, so this is not a long-term vibe. So let's go on a 4-hour chart. Let's see what it's doing. The 4-hour chart is still showing us that it's in a buy condition on a longer-term basis. I mean, this indicator is very, very cool, and I'm actually going to give this indicator for free on our YouTube channel. So
awesome.
I'll be posting a YouTube video, and if you guys come visit our channel, you'll be able to have it. It's really, really good. I actually tested this thing. Especially on dollar yen, it's a monster. It's like a 2.5 profit, not profit target, profit. What is that? Oh my God, I'm losing my mind.
2.5 hours.
2.5 hours, yeah, 2.5 hours for every risk you take. It was just really, really good.
What's the mechanics behind it? Describe it to us.
It's basically a continuity trade. I'll show it to you on a 15-minute chart. Just to kind of, we have time to kill today, so it's kind of fun. It's a continuity trade. It uses Bollinger Bands to first establish whether we're in a buy or a sell condition, right? So let's get a little bit bigger. Maybe you guys can see this. Let's look at this on a more granular basis. So a sell condition is essentially established when we have a couple of candles that actually break through the lower Bollinger Band. The Bollinger Bands, everybody assumes, are a mean reversion. You buy the low, you sell the high. No. Mm-hmm. What they're actually showing you, they're actually great trend indicators. When something goes 2 standard deviations above the mean, that's a breakout move. That's a breakout move, my friend. That is not you buy the dip move. That is actually sell the dip move. And it's the same thing on the upside. It's not sell the rip. It's buy the rip move. However, the proper way to trade a breakout is always on a retrace. That's the hard part, right? So what this thing does is automatically, I automated the whole retrace sequence, and it looks for that retrace moment to give you the optimal entry into a position. And this is designed to just scalp for 10 points because what happened was, went to my YouTube channel. The most popular video we ever did was 15 years old, so bad that you literally can't look at it, but it's all about scalping for 10 pips. This is what everybody wants to do, And I think a lot of people who are obviously taking Surge love that because it offers lots of, multiple opportunities during the day for them to scalp for 10 pips. So I was like, you know what? Let's upgrade this puppy to like an actual really cool strategy. So what it does is it finds the retrace entry. So you can see sell condition, retrace entry over here, and you just look for 10 pips, or this thing actually can make a lot more. This is actually 15 pips, and remember that everything is in points because remember we're on 8 cap, and 8 cap, it's a tenth of a point is a tenth of a pip, so it's right. If you want 15 pips, 150. So, but this thing can go 30 pips. I think it actually can make money for you. And you go 30 pips, you'll see that the things will adjust. You see the sell profit target adjust, the buy profit target adjust. The green and red lines is them hitting the profit target. Okay, mm-hmm. So it's sort of just hitting a target. But the most important thing is you got to be in a sell condition. You have that retrace mode, and you just take one trade. This is the hardest part. Everybody gets so greedy; they want more and more. What happens is if you take more and more sell trades, eventually you're going to hit that retrace. You're going to get stopped out, right? But if you just come in at the beginning of the sell cycle or the beginning of the buy cycle, your chance of making money is. Literally, it was like 90% accurate on the back test. I was hitting 88, 90% of my trades on all of this stuff. And
is that just with one trade, or are you accounting for inventory management as well?
No, just one trade. This is literally like nothing. This couldn't be more simpler. You enter. Your exit on this is if condition changes. It's an open-ended exit. So in other words, you don't stop yourself out just because there's a little bit of movement. It's only if the price action changes from sell to buy. That's you stop out of that. Then you would think, oh my God, that's a big stop. It's actually very small because what happens is if there's a swift change, it's only 15, 20 pips from buy. Like in other words, if the market just completely changes its direction, it'll stop you out of the buy condition and you're out, especially on a 15-minute chart. So you really don't think you're not taking a lot of risk. But here's the thing. You get to stay in the trade until you make profit. And that's how you make 9 out of 10 winners. That's the whole point. Nice. You don't let the short retraces go against you. So here's winner here. We're just in a sell. It was actually this has been all morning long. It's just been this is today because and obviously it's a holiday, so nothing's going on. So this is the sell condition. But if you go over the last and obviously the other thing I was going to say is you obviously don't trade. This is CPI. You obviously don't trade news. It's stupid to trade. Even though this would have made money, you just don't do it. But what's great is watch this. This is CPI. If you just pass by on CPI and trade it post news, look what happens. Post news, it gives you a buy condition, buy entry, virtually literally no retrace. You're buying over here this yellow candle. See, I made every buy sell candle yellow so you could actually see it, right? And boom, you're done. So
Nice.
like, winner here. This one loses. Like this doesn't. Oh, I think I have it. I have it at like 30. I mean, I have it like really, really high. But I don't even think it makes 10. Let me see if it makes 10. Yeah. No, it doesn't make 10. I just missed the 10. But here's the thing. This is what I was going to say to you. 1 out of 9, 10 times, I'm not gonna make my target. But I enter over here at 69, 39, 69, right? And my stop is when the sell condition comes into place, which is 46. It's 20 pips.
Right.
So
right.
imagine, I'm winning.
What's our max downside? Our max downside was 10 or 15.
Like no, the downside here would be 20 pips. Like in other words, it's an open-ended stop. But what I'm saying is, don't be afraid of it because the stop is not really that large in reality. It's like a 20-pip stop, and you are winning 9 times at least 15 pips. But you could have easily made 20 pips on each one. So imagine, you minus 20 on one, plus 180 on all the other ones, or even plus 90 if you're super conservative.
So are you running this now live, or are you still sitting it?
I just coded, but you eventually we'll eventually run this. There's all sorts of cool stuff. I mean, I think we talked about this. I don't know, maybe we didn't talk about this. That we're going to be doing Trader Fest coming up in July. I've actually I got another market wizard to come join me. Tom Basso, who's like the original, the OG, great guy. And we're going to be talking about, and I have a couple of really great guests. I mean, we'll be releasing the whole guest list very, very soon. But one of the guests, I got him to, there is a software that basically takes signals from TradingView, right? And allows you to put the trades through MetaTrader 4 automatically. So this thing is programmed to make alerts. So you can see like it has, I can put an alert on there. Actually, I already, put the alerts on here. So all you got to do is just click the buy alert, click the sell alert, set it up. That's already set them up over here. So the way the software works, it's called this indicator is called Bollinger Scout Pro. Is the alert triggers this piece of software, and the thing is, you don't even need a paid TradingView account. As long as you have a free account with one indicator, like let's say you take my indicator, you put the software on, it will automatically trigger the trade in your MetaTrader, and
nice.
Like without you, which is really awesome. Like I was blown away personally. I was like that's like solves everybody's problems. You don't have to code this in MetaTrader in order to make it happen. Which is really
that's
awesome.
Great. That's great. You're giving this away on your YouTube channel.
Trader Fest is going to be all about these really cool new tricks that technology is bringing to the world. So we'll be sharing that as well. But anyways, so this this strategy is just done really well. We kind of went off target about as to like where we think anything is. So let's take a look at this on a longer term basis. Let's see, like as I said, right now, even on a 4-hour chart, we're still very much in a buy condition mode, right?
When we look at your model, what's the what for this strategy? Are we trading anything, or is it specific to certain assets?
This model, and remember, and this is really, really important. There's only 2 models in trading. There's a continuation model and a reversal model. So the what has to be the most continuous instrument in Forex. The most continuous instrument in Forex is dollar yen. So like this works amazing on dollar yen, right? And horrible on euro dollar. And what was the worst of it? Oh, really, really bad on gold, because gold has no continuity whatsoever. Like it just busted. That's the whole point. So that's what I'm trying to explain to people. No strategy will save you. What will save you is choosing the right instrument. You have to have the right strategy, the right instrument. So dollar yen is just golden on this. So this works on dollar yen. This worked on euro CAD, which is also a very continuous strategy. This worked on pound yen, also great continuous strategy. What else did I test this on? Oh, it worked great on US 30. Another great continuous instrument. Nice. Like anything that you think is continuous, this is going to work on. Anything that doesn't have lots of continuity, is not. So cool. You're looking, it's kind of interesting because all you got to do is just look at, what instruments are trending in the market. Like, what's been moving in one direction, up or down, over the last week and a half, and that becomes your filter list, and then you can apply the strategy to those, to those things. And then conversely, you say, what's been really, really choppy? Who do I want to avoid completely? And I think that's a step that almost everybody doesn't take, and that's the most important step.
Well, they should be doing that with all their strategies, really. I mean, you're finding that what first.
Correct. You got to find out what works best on your thing, because it's not like everything is going to work. Only certain things are going to work, and you will save yourself huge amounts of losses, and also make yourself tons of money if you just ask that one simple question. What is most optimal to this strategy today, or in the next year, right now, over the last 30 days, and you just flip around. It's like if you're pure, you have to be purely mercenary in trading.
Of course, you can't fall in love with any asset.
No, exactly.
What else you got for us?
And all assets change their stuff.
Sure.
So let's take a look at just like the basic. Let's get rid of this, and maybe we'll just take a look at on a daily charts, just pure clean charts on everything.
Yeah, bring us through our usual oil, gold, Bitcoin.
Right. Delete this. So I got so this is US 30 daily chart, right? And another reason why you want to be cautious, right? This 34.5. I mean, we're hitting lots and lots of resistance, and although we all know, I mean, you guys all know that that I'm very skeptical about support resistance, that these are just wiggles on a chart. But in combination with sentiment, that's when you want to be careful. So actually, this is the second day in a row that we're kind of turning around. That we're just losing ground. Just from a pure price action point of view, the way you basically, I would short this with a stop at 34,650, maybe 50, maybe 34,700. Just basically, if I'm going to pick a top, this is a very reasonable top to pick.
Right.
Maybe it'll pop, but if it doesn't, it certainly has huge amount of room to go, like 1,000 points to the downside to go. Nasdaq, on the other hand, I think is still very good. Like Nasdaq is just parabolic at this point.
Sure.
And not really correcting as much. I think with Nasdaq, you probably you don't want to jump in front of a train. The smart thing to do when you have these kind of parabolic moves is maybe it has a little bit of weakness. You want it to come down, then you want it to retest back up. What you want to do is you want to see a double top failure. If it kind of fails at the 15,000, if you can't make fresh highs in the next week or so, like it just kind of comes down, makes a little pump and then just kind of dies out, you'll have a lot more confidence saying, okay, people are getting tired. There's a lot of, slow down the momentum. People are kind of bought out. Now the profit taking is going to probably come in a little bit into the trade on the long side. Gold has just been a disaster. I mean, a disaster in a sense that, it's just doing nothing. It's This is, if you look at this is a daily chart, and you look at this, and unless maybe it's actually interesting. I'm actually curious. Unless you kind of buy selling tops, buying bottoms, like this is pure range. This is just chop conditions. So let's go on a 1 minute chart. Let's put this on our Bollinger Band, on our my bounce territory. But let's switch. The beautiful thing about bounce is we can switch into reversal mode. Let's see how he would have done. There's not that many trades here, but let's see how it would have done on Friday. What is this? This is Friday. Oh, this is Monday. Oh, this is today. So you had one positive trade today. How was this on Friday? Actually, Friday you can see. Oh, this is Sunday. This is a reversal mode. Even in a reversal mode, this wouldn't have done very well. Yeah, even a reverse. See, when you're in chop conditions, this is reversal mode. You're not even picking up a lot. This it's like a sort of a half kind of a trade.
Right.
Okay.
What do you think it's going to take for us to get some direction here?
Nothing. I think the inflation story is done. Gold is done. I think gold is just gold is the ultimate sucker bet, and it will stay. Right after Bitcoin, gold is the second biggest sucker bet in the world. So I don't think I think that's anything positive. Let's take a look at like a real commodity, which is oil. And remember, with oil, as we say, oil. Oops, let me. What happened here? Is it 4 hour? Oh, I just went. Is this? Am I on a 4 hour? I'm on a 4 hour chart. Let me just get rid of all the labels so that we don't get just distracted by all this stuff. So remember, I've been bullish oil, right? And it's not like it's been a great trade, but it hasn't been a horrible trade. Like I said, we're gonna stop is below the lows. We haven't even come close. This is a 4-hour chart, right? Okay, we had a double bottom, and we're actually kind of crawling a little bit up. It's not like I love oil to the upside. It's just I don't love it to the downside. I think it's a modest positive trade into the 74s. I still
you stay away from it, or you something you would take?
I would just I'd buy the dips. I'd buy the dips on an intraday basis. I think it's worthwhile buying the dips. Like if we go on a 1-minute chart in oil, it's and you start buying. You just buy the lows. Let me go into sorry. Put the labels on, and then we'll go into inputs into regular mode, trend mode. Oh, I think I know why, because this has stops and targets. This is for if you do like $2 stops. Okay, so oil's still very, very choppy, but you do see lots of green, lots of little green tail. It's fine. I would definitely not be I'd be much more of a buyer. Buyer on the dips, right? Like underneath the day's lows, because you do see it rallying from the lows continuously.
Right.
But it just doesn't have much. I wouldn't be chasing it to the uppers. So like if you're trading oil and you're using bounce, I'd be buying underneath the half a lot, definitely underneath the quarter lot, buying here, but not really chasing through the upper quarter of the day where you just don't have enough juice. I'd be buying any kind of a dip here, on a continuous basis. Just give it a shot. But yeah, I mean, it's a quiet trade. At this point. The dollar yen trade. Now that's an interesting trade, just sort of from both perspectives. Remember we talked about that it hit the 42, the round number. This gets interesting to me. This 42 round figure. It's always interesting because obviously it hits the first time. That's a big momentous step. The question is if it fails the second time, that's probably going to be an interesting fade. I think that's if you're sort of following Jason and you get this move to the downside, it's probably going to be an interesting fade to the downside. We don't have much as far as the economic calendar goes this week. That's of truly.
But before you leave the charts, what do you have for Bitcoin?
Oh, Bitcoin, yes. Okay, Bitcoin, our favorite nowhere man. Let's go to the 4-hour chart of the Bitcoin. I can't really make a case for the downside on Bitcoin. If you look at Bitcoin on the 4-hour chart and you're respecting the price action, it found the bottom at this 25. Right. It's not like it's a screaming buy, but again, I definitely it's in a buy zone. Found a bottom, consolidating. Could it roll over? Yes, but what I think is interesting is the way I'll be looking at Bitcoin here is if we get to the 27,000. I probably would want to chase it to the upside. That's the hard trade is to buy the 27,000 because everybody's going to go, oh, it's going to top out. But that's probably going to have enough juice to maybe push us all the way out to the 28, 29,000. It's a momentum trade always, and in this case, I think you have to trade the momentum to the upside. We have sold out,
right.
Unless we start rolling back down, and coming right back down to test the bottom. The trade here is to the upside, but you got to wait. There's no trade here. It's just consolidation. The market is still trying to figure out which way to go. But if it's if they can push the price through 2,700, they're going to trip a lot of stops here, and there could be a momentum move here to the upside. So I actually, push comes to shove, gun to my head. I got to be buying Bitcoin here. Yeah, that's
good commentary. Thank you.
That's a story as far as that goes. And then let's just take a look at the Cal here for a second.
Please.
Where's my calendar? Here we go. I use Trading Economics. Really good calendar, free. The guy who made it used to work for Kathy and I, so we know he's really smart. It's kind of a good filter calendar for.
It's not on your screen yet, Boris. You're still showing charts.
Oh, sorry. Share this tab instead. Thank you. Okay.
Thank you.
Economics. Yeah, I forgot that you got to share the tabs. So this is Trading Economics. Really nice, clean calendar. You can see obviously today very, very quiet day. highlights the red. You always want to look at the red bands because those are the most important. We have the RBA minutes. RBA obviously hiked, so that was that was bullish. We don't really have much, building permits. Where is the? I thought he was testifying, Williams. I guess he's testifying on Wednesday. Excuse me. We have inflation rate out of UK, very important, because that's been UK has been the hotbed of inflation, right? So that's going to be an important look at all the UK data at 2 o'clock. UK data, what's up with the 2 o'clock in the morning releases? They used to be like much more civil at 4 o'clock in the morning, New York. Now they really went way too early. Although if you're on the East Coast, it's only 11 o'clock at night, so it's perfect for you. And I'm looking for, I thought the testimony, I guess they don't have the testimony here. Oh no, here's testimony. You see the red band? That's what you're going to be looking at. So we have testimony here. That's going to be Wednesday. We'll see what Chair Powell has to say. It's definitely going to have a little bit of action on the market.
What are you expecting to come out of that? More of the same, or you think we get a surprise?
No, nothing. It's like he's going to just repeat the same pablum that he always does, which is like we have a dual mandate, blah blah blah, blah. The politicians are going to grandstand on both sides of it, and it's a question of whether somebody pushes him and says, do you think it's possible? Like if somebody says to him, do you think it's possible that you may hold in July as well? And if he doesn't say no, we categorically think, unless something radically different changes, we think it's reasonable for us to tighten. If he doesn't say that, if he says, we're data dependent, we never pre-commit to anything, if he gives that kind of an answer, I think you got to be thinking that it's bullish.
Interesting.
And that's, by the way, bearish dollar yen, right? Because dollar yen is obviously always trading on higher U.S. interest rates. U.S. yields could come down. That could be a nice, interesting trigger for our short dollar yen trade. Or long yen trade, short dollar yen trade this week. Right. I'd be looking at that as an interesting trade. Then we have it's really all UK. It's UK data, UK monetary policy meeting, then a second day of Fed chair, and then I think we end up the week with on Friday with nothing, just services. What else do we have? Sorry. Nothing. It's kind of quiet. Manufacturing PMI and stuff like that. It could be one of those kind of things where whatever Powell says could have a 2 or 3 day push throughout the markets. The markets would just react to what he does on just a continuous basis. It's still early. We haven't hit the summer stall yet, so I do think there's going to be some volatility. But as I said, really the most interesting trade, because it's the least loved trade. It's a trade that I think nobody is really thinking about, is the long yen trade. And I would be, Powell dovish would probably be a great trigger for a long yen or short dollar yen trade, especially at these levels. Especially if you get any kind of strategy signals on that.
Right. So the sentiment and the strategy, like we were talking about.
Right. Sentiment and strategy are the two really, really important things. And you want to combine those two. There's three things, right? The instrument, the sentiment, the strategy. You get those three things right, you've got like 95% of the success of your trade. It's not easy, but at least you know what the ingredients are.
You have a game plan.
Exactly, and that's a better game plan than 95% of what you watch on YouTube. Trust me.
Awesome. Well, Boris, thank you so much. I know it's a slow day today, but we really appreciate you coming out, and we look forward to seeing you next week.
Absolutely, we'll be ready with bells on. Everybody enjoy and watch Chair Powell this week. That's going to be the story.